and welcome to Macros with Mythili, the ET Now show that takes a hard look at all the major macroeconomic issues and developments in India and overseas. In this issue, we're going to take a hard look at an issue that's come center stage following demonetization, or more correctly, withdrawal of the legal tender status of 500 and 1000 rupee notes. We're going to take a look at the challenges before banks in making a success of the move to digitization. And joining me in the discussion are two experts who've been closely involved in conceptualization and the rollout of digitization in Indian banking. So let me welcome Padmanabhan, former Executive Director RBI and presently Chairman Bank of India, and Mallikarjuna, Executive Director Syndicate Bank, who started his career as an IT officer and is today one of the youngest executive directors in a public sector bank. Let me start with you, Padmanabhan. The Unified Payments Interface was supposed to be one of the simplest payment systems in the world. But the evidence on the ground so far shows that despite the increase in the number of transactions routed through UPI, something is missing. It just hasn't got the kind of traction that was expected. In fact, latest numbers suggest that the transactions actually come down in November. So what is missing? Is it lack of awareness, lack of interest from banks?
As far as the UPI is concerned, we will have to remember that this was launched just a few months ago. So any new application takes some time to get the traction, but having said that, there are challenges that the banks would be facing, and the banks are in fact facing. And let me take my bank and try to explain why we have still not been able to. We are almost there, but we have still not been able to join the UPI, because first of all, to get this going, we had to do a vendor selection, its own process, and then once that is over, we have to do the testing to make sure that things are safe. And now we are almost there, we are starting. Now, I don't think, at least as far as my bank is concerned, I think it applies to most of the banks. The people will have to visit the branches to become or start using the UPI. That's no longer necessary. It can be done online. That's not a problem. But having said that, the big challenge would be for the educating the customers. And for educating the customers, I have to ensure that we educate our own staff. So it's a process. That process is taking a little bit time. But this probably, once this is in place, this is so ubiquitous and easy to use, so we are expecting the volumes to really climb.
As a practicing banker, would you agree with Padmanabhan? What is your sense of why UPI has not taken off the way one would have expected, given, as he says, both the ease of transacting and the pace of telecom penetration in the country? Also, would you agree that banks have been relatively slow to respond to the challenge posed by these companies, like e-wallet companies, and they have now come to occupy the space that banks have willy-nilly vacated to them? Is it too late for banks now to claw back on that lost ground?
First thing is that I would like to agree with what Mr. Padmanabhan has said with respect to the starting of UPI, which has happened only few months back. Now the question is, it is an application which currently can be downloaded, there is no longer requirement of the people to reach the branches. But we have to still show that the consistency and confidence, we have to get the people for using of this UPI requirement. See, you can see the ecosystem with respect to digitalization. There is a large gap between urban segment and the rural segment. In case of urban segment, they are very much comfortable using the cards and they are able to satisfy their requirements. UPI is predominantly provided for the rural segment of the people, where they can use this system because they don't have that kind of ecosystem available in those locations like POS missions and other things. So on that context, customer literacy is a very important factor. Like Padmanabhan sir said, first it has to be, we have to educate our own people and disseminate the information to the population who are in the rural segment. It is a good initiative, but it takes a little amount of time when we continuously pursue this with sustenance, showing the confidence and consistency to the rural masses.
Padmanabhan, is the resistance really coming from banks, from customers, or from merchants? And is asking merchants to give discounts the way forward? What happens when these discounts are withdrawn, as they must be withdrawn someday?
Yeah, I don't think there is a resistance basically. I mean, it's well known that going back to what Adam Smith said years and years ago, of all sorts of luggage, the man is most difficult to be transported, which means that for anybody to accept anything new, it takes a little bit time. As far as the banks are concerned, Yes, initially when the UPI was being implemented in the testing stages, in the discussion stages, there were a lot of apprehensions exchanged between the banks and the Reserve Bank and the National Payment Corporation of India as with regard to how can a bank take responsibility for somebody else's app? Why do we want the seamless, ubiquitous applications and interoperability across? But I think most of those issues have got resolved. The IBA got into the picture, they mediated. I think most of the issues have got resolved. Now we have got an application which is perhaps quite unique, I think unique in the world. Now the question is taking this forward, and if that takes a little bit time, because this is something where, as Mr. Mallikarjuna also said, there is a process of education. So a little bit time is needed. But as of now, probably we are a bit rushed because this has to be done on a war footing, given the fact that there are cash shortages. So probably there is a feeling that we are not moving forward fast enough. But let me assure you that this is something which will just bloom, and now that there is fair bit of agreement that even the non-banks will be made a part of the UPI, which was initially not there, I think in principle there has been an agreement among all the stakeholders that non-banks will also get into the picture. So this will become absolutely unique, ubiquitous, and the volumes are bound to increase. I don't have any doubts as far as that is concerned. But having said that, you also raised the issue of the merchants coming in and the question of the merchant's discount rate or whatever is the charges that are being paid by the merchant. Now on this issue of merchant discount rate also, I think a lot of discussions have happened. Different committees are looking into this, and from whatever information I could gather, it is not that all the committees have come out with same set of recommendations. There are different set of recommendations that are being given out, and the sum and substance of what is being tried to be achieved is some sort of intervention as far as the cost of digital transactions are concerned. Now there my view would be that the cost becomes important, or the state intervention becomes necessary when the people are in a way compelled to use digital transaction because of the not as an alternate channel, but because the cash is not available in the country. That's one part. There I think it is reasonable to expect that there should not be too much overhead as far as the customers are concerned. But if we think that through this intervention, that's a way forward permanently to make digital transaction popular in this country, probably that is where we need to have little more discussion, because I don't think ultimately in a country where the infrastructure development is not complete, we cannot, either the State Bank or the government, the Reserve Bank or the government or whoever it is, can have granular interventions at various charges that are being levied. And to me, I think if you study the experience around the world, I don't think these charges ultimately have influenced the customer behavior in a long term. That has to be achieved through different other methods, disincentivizing cash rather than intervening as far as the charges of electronic transactions are concerned. But having said that, short run, yes, this is something which was the needed, and that's being done, but probably we should stop there rather than doing this on a long-term basis.
I think the carrot is always better than the stick. There's no doubt about that. And particularly when you're trying to do it like this on a war footing, I think one has to be very careful about the kind of interventions. But Mallikarjuna, in a scenario where telecom penetration is quite high, but smartphones are a relatively small fraction of the total, and net connectivity is a huge issue even in metros, can we start with USSD, unstructured supplementary service data, where the telecom operator and the bank become parties to the transaction via USSD? Today, the National Unified USSD Platform, NUUP, uses IMPS platform for funds transfer. So could that be a first step, despite the caps on the amount that can be transacted? And should we have these caps at all, Mallikarjuna?
Madam, the first thing is that there is no doubt with respect to the utility and the continuity of USSD as well as UPI is concerned. But the more important factor as on today to understand is that digitalized banking doesn't only include these two. There are many more areas which are currently in vertical use. If you come back to like what I was indicating in urban locations, point of sale terminals are very predominantly used by undertaking the transactions through debit bank and debit card and credit cards. Now that entire ecosystem is it requires a lot of investment cost, as a result of which MD, that merchant fee is a very important factor. Now if the merchant fee is totally removed, even though it is for a temporary nature, definitely banks are going to incur loss in a shorter run, but with a ubiquitous objective of promoting the digitalization, there is no issue. But in the longer run, we will have to definitely look at a sustainable proposition as far as this area is concerned. Further, with respect to UPI and USSD, yes, they are used not only for funds transfer, but that funds transfer mechanism can imbibe itself into routine transactions only when it is effectively used regularly by the people through customer education and other confidence and consistency. Otherwise, till now whatever POS terminals are being used, the ecosystem requires a lot of investment, right from the, as you rightly said, telecom industry is completely involved, whether it is a GPRS or a lease line network through dial-up situation, it requires a lot of cost. So if this has to continue along with UPI and USSD, we need to look at the cost element and we have to see that a sustained model is invented. Otherwise, in the longer run, if the bankers continue to incur loss, probably there would be a situation where the impetus which is required to be given may get affected. So the requirement is, currently we have a lot of technology like you call MPOS machines or otherwise available, which can be used for multi-purpose. But in the existing ecosystem, we carry a lot of other POS terminals which are high cost. Even replacing them is also a cost orientation. So what we need to look at is, we need to have both short-term as well as long-term objectives to take them forward in such a way that at least in the longer duration, it appears to be a viable proposition economically for every stakeholder in this digitalization segment, which will definitely take it forward without any doubt.
Oh, absolutely. I think the need for a roadmap is very, very important. But on that note, it's time for us to slip into a very short break. So please stay with us. We'll be back very soon. Welcome back. You're watching Macros with Mythili, and we're having a discussion on the roadmap for digitization of banks. Given that digitization is an absolute must, there's no alternative. How do banks get there? Can we think of a roadmap? What are the kind of building blocks rather than rushing headlong and then ending up in a disaster? Padmanabhan, not so long ago, over 3 million cards of multiple banks were compromised. The breach was reportedly detected through the systems of Hitachi Payment Services, which maintains ATMs and point-of-sales terminals. This kind of fraud could possibly have happened using an extra mouthpiece, what they call an ATM skimmer, so that when you slide your card in, it first goes in through the criminal's device and then skims all your data and then into the ATM. The breach reportedly happened at Yes Bank ATMs, but it could happen anywhere. So how can we improve the level of cyber security? And is there a trade-off between risk and convenience, cost and convenience, and where does one draw the line?
Mythili, this I think you have raised a very important question. As we move along the path of digitization, it's extremely important that we pay adequate attention for the security, because in the initial phase when people are taking to digital banking, if there are issues which compromises their data or money or information, I think there will be a complete distrust in the system. So it is extremely important that this aspect is taken forward, and as far as I understand, this is being given lot of importance both by the regulator and the government. Having said that, the issue that you flagged about 3.5 million cards, that probably was a larger issue rather than putting a skimmer at the ATM. I think it was the server at the bank which got compromised, and as a result of which any data flowing through that server, there was a potential possibility of the customer information getting compromised. So this leads us to a very important issue that in that kind of situation, what could have been easily solved? I mean, where most of the issues would have been by and large solved. All that the customers had to do was to disable his card for the international transaction and change his PIN. The two-factor authentication which has been implemented in this country makes sure that most of the transactions happening in this country are reasonably safe. So which means that even after this theft happens, and if you recall what happened subsequently, these cards got used in overseas where this two-factor authentication is not necessary. So all that was required to do at that point of time without panicking, which would have resolved most of the issues, would be to block your card for international transaction and change your PIN. But then that brings us back to the issue of customer education. It's extremely important that the customers who are getting into the digital mode are being handheld, not to panic and go around, but to be very cool-headed when such incidents happen, because let's remember that in an interconnected world, there is no way that we can get away from these incidents happening once in a while. But having said that, all the measures are being taken, including the complete certification about the security aspects, the server, the reporting mechanism. Everything is getting revamped by the CERTIN and Reserve Bank of India working together, and I think we will see a better security system as far as these aspects are concerned. But then this is an ongoing issue, and this will have to be done on an ongoing basis. I don't think there is a one-off solution for this problem.
Mallikarjuna, would you agree as an IT man that there is really no complete foolproof answer, and these kind of instances will happen? The idea is to try and minimize them. Can it be done, Mallikarjuna?
Correct, correct. What Padmanabhan sir says is absolutely correct, because the risks are always there in the digital banking. It is only a matter of continuous process of identifying the risks and mitigating them. Now, I'll add two more points here. Number one, with respect to the fraud which you have indicated in terms of the debit cards, as rightly told by him, it was because of the lack of two-factor authentication not being mandatory in those locations that this has been perpetrated. Now, if you recall the RBI guidelines which they have given to us to move towards fingerprint-based authentication in terms of even ATMs as well. So, in the ecosystem in our country with respect to digital transactions, if you are able to move towards authorization by way of a fingerprint, majority of the risks involved in perpetration of these transactions can be reduced. Now, with respect to transactions which are being taken abroad, since we don't have a control on those areas as to what kind of regulations need to be there, but the risks can be controlled when the customers are educated appropriately at the time of their traveling abroad. They can definitely control the limits or deactivate the limits if they don't want to utilize their. Such kind of a mechanism can be introduced with more education to the customers. Thereby, it is a matter of taking the measures for mitigation of risk rather than looking at a situation where with the open possibility of transactions being undertaken and leaving to the any perpetrators to undertake the transactions fraudulently. I fully agree with Padmanabhan sir. It is a system which is evolving over a period of time, and it is not to compromise on the element. If the transaction is a very smaller one, if you keep more and more controls, then the impetus to increase the transactions also will be affected. However, it is a very matured way of taking the transactions together by minimizing the risks continuously.
My next question is addressed to both of you, but let me start first with Padmanabhan. Padmanabhan, in theory, actually banks should have a huge advantage vis-a-vis wallet companies because the funds are 100% safe, whereas with an e-wallet company, there is always the possibility that the company could shut down, in which case what happens to a customer's money? Also, as long as you are using a bank's e-wallet, I guess the customer would be getting some interest, whereas you earn no money on a Paytm wallet. So shouldn't banks be going to town about these advantages, and why have they not? Padmanabhan?
Well, why have they not? I think that's a question that each of us will have to introspect. There was a huge possibility, and I think many of us, including my bank, we have not taken adequate advantage of that. But now we are trying to do that. For some reason, the alternate payment channel in the public sector banks has not been moved aggressively. I mean, there are exceptions. I think there are a few banks which took it out aggressively, but there are other banks which have been taking it in a, that also has to do to some extent with the customer profile that these banks have. But having said that, I don't entirely go along with the argument that the money with the wallet company is not entirely safe, because today the wallet company, we are not talking about the payment banks, the other non-banks which are allowed to issue the semi-closed wallet as they call, that money will have to be, as per regulations today, escrowed in a bank. So there is no problem as far as the safety of the funds are concerned. And even for the payment banks, if you recall, the deposit that's being allowed to be taken by them is equivalent to the deposit insurance that is available in this country. So the safety of funds is not an issue, but the reason why they have been able to move ahead is the agility they have in adopting a technology and moving forward, whereas the public sector banks will have to have a process. Now, this is where I have a suggestion, if that can be accepted by the government and the Reserve Bank of India, is that when it comes to an IT process of implementing an IT solution to do with the ease of customer transaction, etc., can we say that unless we are talking about a huge core banking system, up to a fairly large amount, can there be easing a process so that the banks are able to get this done very quickly? I am talking with reference to the public sector banks. Now, you take the case, the other day I had gone for inauguration function of the Bharat Bill Payment System in the NPCI. The banks who are able to do the proof of concept are the two private sector banks and the cooperative banks. Probably their process are much simpler than the process that the public sector banks will have to follow. So seriously, we have to sit and think whether these processes can be eased a bit, because the need of the hour is digital transaction and digital banking. So I'm not saying that throw all processes to wind, but ease the process so that the public sector banks can also move about or get there much quicker than what they're able to do today.
Mallikarjuna, would you agree with Padmanabhan? And talking about the issue of safety, he said that there are limits, and the e-wallet, you have to transfer the money to an escrow account. But the fact is that there are limits on how much you can transfer on a daily basis, on a monthly basis. So very often sellers find that their wallets are full and they are unable to transfer because there are these limits. So the question of safety still remains, because you could theoretically have an e-wallet company shutting down. You also have the issue of interest. A bank's e-wallet will give you interest, I assume. Am I correct in that, Mallikarjuna?
Yeah, you're right. The basic point here is that wallets are storing the value from other than the bank, even though it is in a escrow account. So why it is done? It is because once the money is transferred to a wallet, you can undertake the transactions seamlessly to satisfy the divergent needs of a customer. Whereas if the same is to be done by keeping the money in the bank account, you need to have multiple tie-ups with various agencies, whether you call it an aggregator or otherwise, so that the tie-up is completely covering all types of merchant establishments, whether you call across the country or across the globe, for satisfying the needs of the customers. That is where the limitation factor comes, as rightly indicated by Padmanabhan sir, with respect to public sector banks. They've been driving the alternate delivery channels very effectively, but the wallet has been not in a priority area when they were pursuing the alternate delivery channels. So wallet can also be pursued by the public sector banking, but the limitation certainly will remain with respect to the amount being stored there, because the tie-ups are required. Now with the change in the various types of technology and other options being available, I don't think wallet only will be a necessity which will remain. It all depends upon the tie-up a banker can make. The reason why the private banks have moved ahead is because there is their agility in technology, and also the way they have adopted by tying up with various agencies. So I don't see as an impediment with respect to public sector banks. However, I do agree that with respect to wallets, there can be a limit rather than totally storing the value equivalent to the outstanding which is there in the accounts.
On the issue of digitization, there are many more questions that I have for both of you, but clearly we don't have enough time, so we'll have to end the discussion now. Indian banks sure have a long way to go before they become fully digitized, but the message that is coming loud and clear, especially after November 8th, is that they will have to look sharp if they are not to lose to the Johnny-come-latelys, the e-wallets and the telecom service providers who've been eyeing this space. Thank you very much, Padmanabhan and also Mallikarjuna, for joining me in this discussion. Thank you also for watching. Remember, we'll be back next week with yet another edition of Macros with Mythili. Till then, it's thank you and goodbye from all of us at ET Now.
Find us on Facebook at facebook.com/etnow and don't forget to click the like button. You can also follow us on Twitter at etnowlive. To stay updated with all our programming, hit the subscribe button on our YouTube channel by logging on to youtube.com/user/etnow.